Hello everybody, this is Matador from freetradingvideos.com. It's 12:30 p.m. Eastern Standard Time. It's still February 23rd, 2010. You can see the S&P 500 ETF starting to sell off here again. After a nice gap down, we watched that gap fill completely, and then when consumer confidence hit and came in at 46 from last month's 56.5, that sent the market plummeting. So typically this would be a very nice kind of gap fill to watch. Might have even looked for a higher swing low or a continuation consolidation move. But after this multi-bar run-up we've had on a higher time frame, like we talked about, into resistance, 50 MA, 50% retracement roughly, a little bit better than that, we are now seeing this sell-off. We'll have to mark the volume at the end of the day to check that out, but it's happening. So a good sell-off right down to our 110 level. Excellent support. Bounced a few times. You know, almost spent most of the day there basing on its low, and we just now broke below a pretty good level of 109.95. So the 110 mark still remains in effect, but now it's resistance. On a higher time frame, you can see how powerful the 110 mark is, and we've made a good test of this 200 MA, but not completely. So keep this in mind on a 15-minute chart. On a 60, that's a perfect touch of the 50 MA. That's why we're stalling here. That's why this 109.76 area, this gap fill from back here, is in effect. So we have all these things trying to hold the market up, but it's definitely falling under some pretty good pressure. So on the way back up, if we get a bounce here, I'll be looking for 50% retracement at the very, very best short term, and that would be right through here. If we remove that 50% Fibonacci, so 110.60. Interestingly enough, that might as well be 110.50, and that was a relevant area from before. So now this whole thing becomes an area to watch out for on the way back up, if we get a bounce. If not, we may head lower, and on a higher time frame, again, that makes sense because that would be a logical pullback after a multi-bar rally like this. Interesting. I like doing this. So here's a retracement all the way from the lows to the highs, and look where that lines up. It's 108, another one of our marks. So we leave that in there as well. 108 could be a very nice support. That also happens to be a perfect gap fill. So hopefully you're able to see these things coming up here. If not, keep watching and use these areas of as resistance support going forward. So good stuff, everybody. We do have a Meet the Mentor call tonight. If you're interested in that, you can contact Mike Williams. I'll throw an email address up there for him. We also have a webinar coming up. I'm giving a presentation on market internals and how to effectively use them along with price. So when I talk about the VIX, for instance, and how it's rising right now and it's confirming the broad market move, and the trend, how it's really rocketing up here but almost getting into an oversold level, and there's a bit of a divergence there between price and the trend now, and the trend Q, how it's unbelievably confirming but also getting close to being oversold. All those ideas about how to shore up your trading work by tearing apart the broad market to find out if that price action is built on rock or built on sand, and then using that as a filter to judge the relative strength or weakness of your individual stocks can be a very powerful addition to your trading tools. Anyway, that's what the seminar is going to be on. It's going to be on March 4th from 8:30 p.m. Eastern Standard Time to 11:30 p.m. Eastern Standard Time, and it's going to be awesome. Very good stuff. So I hope you guys have a great rest of the trading day, and maybe we'll see you tonight or at the webinar, and look forward to D7's video at the close.